Welcome back to the weekly Macro Roundup, your concise breakdown of the biggest global economic, political, and market developments from around the world. Let's dive straight into the key events shaping the United States, China, Europe, Canada, the UK, and Japan. This week, U.S. markets were driven by earnings reports from major manufacturers and transportation companies, highlighting the pressure created by President Donald Trump's policies on trade and energy. The U.S. trade deficit widened in November due to a rebound in imports, while jobless claims ticked down, suggesting stabilization in the labor market. President Trump signed an executive order enabling tariffs on goods from countries supplying oil to Cuba. Meanwhile, the Federal Reserve voted $10.2 to keep interest rates unchanged, noting some stabilization in unemployment. Chair Jerome Powell emphasized that the Fed expects economic improvement over the next year. The government shutdown continues, though a bipartisan compromise may allow the House to reopen the government as soon as Monday. Trump has also selected former Fed Governor Kevin Warsh, a known critic of loose monetary policy, to replace Jerome Powell as Fed chair in May. Markets see this as a signal of stricter rate discipline ahead. The U.S. Treasury added 10 economies, including China, Japan, South Korea, and Taiwan, to its currency watch list, calling the yuan severely undervalued. Durable goods orders posted their strongest gain in 6 months. Meanwhile, consumer confidence plunged to its lowest level in 12 years, driven by inflation concerns, a weaker labor market, and pessimism about the economic outlook. A separate University of Michigan survey, however, showed confidence hitting a 5-month high, reflecting conflicting sentiment across different demographic groups. Gold surged to a record above $5,100 per ounce, up 18% this year after a massive 64% jump in 2025, driven by monetary easing and strong central bank buying. Finally, the U.S., Denmark, and Greenland discussed a new Arctic security framework following Trump's tariff reversals. And in trade news, Trump threatened 25% tariffs on South Korean imports over delays in implementing a bilateral trade agreement. Moving on to China, China is pushing to cultivate new growth drivers in transportation, autos, and tourism, while encouraging local governments to address excess housing inventory. The People's Bank of China plans to expand its policy toolbox, including support for cross-border RMB use and offshore RMB markets. Chinese authorities have signaled that major tech companies, including Alibaba, can begin preparing to purchase NVIDIA's H200 AI chip. Household surveys show Chinese families becoming more conservative, increasing savings as pessimism about income rises following the escalation of U.S.-China trade tensions. Reports indicate regulators may no longer require real estate developers to submit 3 red lines debt metrics, marking significant policy easing. China is also considering raising around $29 billion via special bonds to recapitalize major insurers, funds that may also help backstop smaller, at-risk institutions. The domestic stock rally cooled after regulatory intervention, and state-backed ETF flows have prompted concerns about deeper reductions. Investors are shifting towards small and mid-cap equities. China's global lending has declined sharply, but developing countries continue to face large repayment burdens. Chinese companies are leaning on overseas expansion. Anta Sports agreed to buy a 29% stake in Puma for $1.5 billion, becoming its largest shareholder. In the Eurozone, Chinese automakers hit a record, accounting for nearly 10% of new passenger cars sold in Europe last month, mostly via hybrids and EVs. The EU economy is projected to be 1.4% larger this year due to reforms under the Post-Pandemic Recovery and Resilience Facility, which expires in August. EU officials criticized Canada and the UK for aligning too closely with China on technology issues. Germany expects GDP to rise between 1% and 1.5% in each of the next 2 years, helped by major government spending on infrastructure and defense. Germany's gold reserves have surged in value to nearly $600 billion, up 19x since 1999. Germany's auto industry faces cuts of nearly 100,000 jobs by 2030 as manufacturers scale back EV plans amid weak demand. The Eurozone economy grew faster than expected at the end of last year, despite trade tensions with the US. The EU is also seeking additional LNG supplies from Canada, Qatar, and North Africa to reduce dependence on US gas. In Canada, Trump threatened a 50% tariff on Canadian aircraft and proposed decertifying Canada-manufactured planes, jeopardizing Bombardier's U.S. market access. Canada's economy is expected to contract at a 0.5% annualized rate in Q4. Manufacturing fell sharply due to U.S. tariffs on steel, autos, and lumber. IPO activity, dormant for 4 years, is expected to revive in 2026. Ontario Investment Management noted that investors increasingly see the Japanese yen, Swiss franc, and gold, not the Canadian dollar, as safe haven assets. Canada's trade deficit widened to $2.2 billion due to falling gold exports and vehicle shipments affected by semiconductor shortages. The Bank of Canada held rates at 2.25%, warning that Trump-driven U.S. policy volatility clouds Canada's economic outlook. China resumed purchases of Canadian canola under a new deal, cutting tariffs and suspending punitive duties. Prime Minister Mark Carney introduced a GST credit boost for low- and middle-income households worth $3.1 billion in the first year. Moving on to the United Kingdom, the UK is assessing whether Trump can block its plan to transfer sovereignty of a strategic island to Mauritius. UK pension funds are increasingly moving into private markets, while major British banks pledged $11 billion in loans to support global expansion for UK firms. Pubs will receive business rate relief worth $1,650 per venue in 2026 to 27. London's luxury housing market continues to weaken, with prices down 4.8% last year and 25% below 2014 peaks. Business confidence weakened, inflation in shops hit 1.5% year-over-year, and food inflation reached 3.9%. China will ease visa restrictions for UK travelers and may explore a bilateral services agreement. Inflation and national insurance hikes are still pushing up prices, but PMI data shows business activity strengthening at the fastest pace since April 2024. Poverty has deepened, with 6.8 million people living in very deep poverty, the highest in 3 decades. And in Japan, Prime Minister Sanae Takaichi's approval rating slipped after calling a snap election. Japan's currency has been supported by expectations of coordinated intervention with the US, though history shows FX intervention may offer limited long-term impact. A sudden surge in Japanese government bond yields shocked global markets, marking an unusually sharp one-day move compared with years of ultra-stable JGB markets. That wraps up this week's Global Macro Roundup. If you found this recap helpful, don't forget to like, subscribe, and stay tuned for next week's insights. Thanks for watching.